Tesla's quarterly numbers are out, and investors are disappointed. The Elon Musk-led company delivered more than 380,000 electric vehicles in the first 3 months of the year. That's down 8.5% from 1 year ago. Analysts had expected a number closer to 450,000, and the 70,000 car shortfall contributed to Tesla's 5% stock drop Tuesday. But in the global competition for electric vehicles, the news was better for the American car maker. Tesla reclaimed its title as the #1 seller of fully electric vehicles. Last quarter, the company fell behind BYD, a Chinese firm which counts among its backers Warren Buffett. Rebecca Elliott covers Tesla for the Wall Street Journal, and she joins us. Rebecca, why did Tesla's sales fall short, and why did experts think they were going to be closer to 450 than 380?
Sure. Well, this is the first time since 2020 when Tesla's quarterly deliveries fell year over year. And that came down to a couple of factors. One, interest rates are higher than they were a few years ago. We're seeing electric vehicle growth slow more broadly. And then also Tesla's lineup is getting stale. The company also pointed to a handful of production setbacks in the first 3 months of the year.
And then, so what do we know about companies like BYD, its market, and how does it compete with Tesla in this larger global competition?
Sure. China's BYD has been growing very quickly. It has a couple of strengths, particularly the way the market is shaping up right now. It sells electric vehicles and plug-in hybrids. It also has a wider array of offerings, many of them at a more affordable price point.
And help us remember, or maybe we didn't know at all in the first place, how does the U.S. compare with other countries in EV production and adoption?
EV adoption in the U.S. has lagged behind that in many other parts of the world, China, Europe, and in the U.S. right now, we're seeing EV penetration continuing to grow, but more slowly than it was just a year or two ago.
And what does Tesla say, or Elon Musk say, about this last quarter and kind of what the future looks like for Tesla?
Tesla has described itself as being between two growth waves. The first driven by its very popular Model 3 and Model Y vehicles. The next to come in a couple of years when it releases its low-cost car. As for this most recent quarter, Tesla pointed to some production setbacks, including shutdowns at its plant in Germany and a slowdown in the U.S. in production associated with bringing a refreshed version of its Model 3 car to market.
And more broadly in the U.S., there's obviously been some encouragement from the Biden administration to adopt electronic vehicles, make it easier to both manufacture them and also own them. How have those been accepted or not by American manufacturers as they try to participate in this global race?
Sure. Well, as you mentioned, we now have a $7,500 tax credit that is available to the wider array of manufacturers than it was before. There had been production caps previously. And so in the past several years, you've seen manufacturers really aim to boost investments in electric vehicles. However, at this point, with consumers being more hesitant to go electric than many of them had expected, you're seeing those automakers start to recalibrate their investment plans.
Rebecca Elliott with the Wall Street Journal, thank you so much for being with us.